Our YouTube, Professor Mike and his partner in crime, Stella the Shepherd over here, are back with a video number 2. And this company is a company that I think you all find very interesting, something I've been following for a while. And it's the company's called New Fortress Energy. And the situation here has changed a lot over the weekend, and I think there's some exciting news that we can expect to see a pretty positive reaction on Monday. Today is November 29th, Saturday after Thanksgiving, and I believe with this news, the market should reprice this bankruptcy risk that it currently was pricing in, and we should see a pretty significant positive reaction on Monday. So just a little background and what the situation means. So New Fortress Energy was on the brink of bankruptcy. If you owned a single share of New Fortress Energy, you've seen the way the stock's been trading. Even the past week was an absolute nightmare. As of Friday's close, the stock was trading at just $1.22, which is pennies above its all-time low. And it's because the market was pricing in a near certain bankruptcy. I had actually asked Gemini to do an analysis for me on Friday, and it told me that I should sell every share I have because there's like a 95% probability of bankruptcy. Today, everything has changed, and the news came out today, and it's the biggest lifeline in the company's history, which is a multi-billion-dollar contract that just got the final official sign-off. And because the news broke after the market closed, Monday's shaping up to be one of the most explosive trading days of the year. At least it should be, unless there's something priced in there that I'm not aware of. And maybe the market, the reason why it hadn't gone to zero is because there was an expectation this deal would go through. But I don't think so. I think it dramatically changes the value of the assets in the company, as well as the ability to pay off some of these liabilities. So the doomsday scenario, what the setup was, the crisis that NFE was in, it's not a typical company. They're carrying a huge amount of debt, over $9 billion in debt, and that debt load caused 2 critical things to happen recently. And the first was a missed payment. The company actually missed an interest payments on its senior notes, which forced a major credit downgrade and put the company in selective default status. And selective default means that you're going to go bankrupt. You're going to file Chapter 11 pretty soon. And there's a looming deadline because NFE entered into a short-term forbearance agreement with lenders, essentially giving them a few weeks to live. I think it was extended out for 3 weeks, sometime in mid-December. And the financial market consensus was totally clear on this. NFE had no clear path to refinance that debt, and a Chapter 11 bankruptcy filing was highly probable. And this imminent default risk is why the stock was absolutely destroyed. When a company files for bankruptcy, common shareholders, which is what you are when you're buying the equity, are totally wiped out. And analysts priced this risk into the stock, and the consensus was a firm sell or avoid. Now, what happened today? And this is a big deal. The one thing that could save them was a single massive deal, a long-term LNG supply contract with PREPA, which is Puerto Rico's power authority. And over the weekend, when the market was closed, the FOMB, which is the Financial Oversight and Management Board, issued its final official certification, which means the deal is approved. And initially, they rejected a messy $20 billion proposal that came out a few months ago, and the stock popped like $3 on that news. But after months of revisions, the FOMB certified a new, shorter 7-year gas supply agreement that guarantees NFE a minimum revenue stream of $3.2 billion. Now, that $3.2 billion is far less than the $20 billion approval that they were initially seeking, but this is legally contracted revenues that at least they can now borrow against that cash flow and that guaranteed stream of revenue and use that money to finance or refinance some of the existing maturities that they have. So they can now pay off this debt that was extended until mid-December, as well as some other shorter-term maturities. And then this gives them the opportunity to now continue running the business and figuring out ways to do similar deals like this one and maybe eventually refinance their entire balance sheet. And this guaranteed, government-backed cash flow, which is exactly what lenders needed to see, because they weren't gonna finance them on some risky flows. But because this is a government-backed cash flow, lenders are way more willing to issue new lower-cost debt secured by this contract. And now NFE can use that money to pay off the high interest rate debt that was causing them to default in the first place. So the approval eliminates the single largest uncertainty hanging over the company. I wouldn't say the crisis is over, but it's not an immediate crisis, and the stock no longer should be priced for imminent death. And now this is where things get interesting, because there is a short squeeze set up in addition to everything else that's going on. And there's a few reasons why you should likely see some buying pressure. And the first would be an algorithm reset. So if you think about it, sophisticated institutional traders use automated risk models. And especially a short-long fund where they're shorting stocks, they are using algorithms to balance that portfolio. And a company that's headed for immediate bankruptcy is a great short candidate. But those moments, the moment those models are updated with the new guaranteed $3.2 billion in revenue, their risk rating flips from imminent default to a distressed turnaround. And it instantly triggers algorithmic buying. So you will see buying from that. Then you'll also see, hopefully, an analyst upgrade cycle. So any analyst who's slapped a sell rating on NFE now have to update their models, and they can finally plug in guaranteed long-term cash flow into their models, and the new price targets will be dramatically higher than $1.22, leading to a wave of rating upgrades from sell to hold or underperform. So they no longer have that sell rating, or shouldn't at least, with this guaranteed cash flow. And then the third and the most compelling is the short squeeze trigger. So this is really the most explosive factor. NFE has an extremely high short interest, with some data showing that well over 30% of public shares are held by short sellers. That's a significant portion. I've actually seen this stock. There have been posts about it on Reddit, and the Reddit crowd is kind of all over this. So it could be another GameStop style short squeeze setup. And short sellers were betting that the company would go bankrupt and their risk would disappear. But the FOMC approval proves them wrong. When a massive event invalidates the short thesis, those sellers have to rush, and they panic to cover their positions because they don't want to lose all those gains they made, meaning they're going to buy back the stock immediately. So this wave of forced buying volume should likely ignite a short squeeze that pushes the price up rapidly, and it could potentially far exceed its fundamental value. And if there is a short squeeze, then what the company could also do is take advantage of that short squeeze, similar to what Hertz did when they announced bankruptcy, or AMC, or any of these companies that have taken advantage of the short squeezes, and they can issue some equity and then actually use that to even pay down rather than refinance some of that debt. So I see this as the Hail Mary that could pay off. And on Friday, I was really thinking this company was doomed, and I was just going to ride it out because whatever. But now things are interesting. So the time for debate is kind of over at this point. The price on Friday was a death sentence, but the FOMC approval is the official pardon. And all that pressure that was pushing the stock down should reverse into a massive pool of potential buying power. And whether this is the start of a long-term turnaround or just a quick, sharp squeeze remains to be seen. But one thing is clear: Monday's open will be one to watch. And I'm expecting, it's at $1.22 now. I mean, it could easily trade up to $3, maybe even higher than $3.50, depending on the volume and what type of squeeze we see. It could turn into a multi-day squeeze, and then over the long term, on a pullback, if you're a value player and you think that they can resolve this, and you like management, it could be a good point to start accumulating shares. So good luck to all. This is not financial advice, but just something I noticed, and I wanted to make a little video about it to share some of this knowledge. So I hope you found it interesting, and good luck and successful investing to all.